In this video, I'm going to break down the factors that will give you a cheaper interest rate, things that lenders will penalise you for and charge you a higher interest. My name's Anthony from Bulk Mortgages, and if you find this video helpful, don't forget to press like and subscribe now. So if you're in the market of buying a property and you're looking at getting a mortgage, you're probably wanting to achieve the cheapest possible interest rate that you can. And although that's not always possible for everybody based on loads of different factors, in this video we're going to break down a few steps you can take to make yourself look more attractive for lenders when you're applying. One of the biggest factors in making sure you qualify for cheaper rates is the size of your deposit. Size matters when it comes to deposits. So the bigger of a deposit that you put down, the cheaper the interest rate is. The reason for this is if you've got a 5% deposit and the house prices have a bit of a dip and the lenders need to repossess you, there's a high possibility that they'll lose money on the mortgage that they're lending to you. Whereas if you've got, say, a 25% deposit, there's a much lower chance of them ever being in negative equity if they ever need to repossess the property. So the biggest way you can help yourself qualify for cheaper rates is getting a bigger deposit. It works in multiples of 5%. So 5%, you're charged the highest possible rate. It then drops down at 10%, 15, 20. When you get to 60% loan to value, so a 40% deposit, the rates tend to kind of level out, and there's not many thresholds below that will allow you then to qualify for cheaper rates. The second biggest factor on being able to qualify for cheaper rates is having a great credit score. So it's not necessarily impossible to get a mortgage if you've got bad credit. However, the interest rates tend to be slightly higher than somebody that has got perfect credit and has never missed any payments. Again, the reason behind this is if you've missed payments in the past, the lenders are worried that you may potentially miss mortgage payments when they do lend the money to yourself. So the best thing you can do is make sure everything's set up on direct debits, make sure that you aren't falling behind on payments, you're registered on the electoral roll, do not have a huge amount of debt compared to your income. All of these factors will help improve your credit and make you look more trustworthy when you're applying for your mortgage with the lender, and in turn getting potentially cheaper rates. The third tip on potentially qualifying for cheaper deals is a little bit outside of your influence. So depending on what you do for work, whether you are a nursing bank, a limited company director, self-employed, work in the construction industry scheme, all of these particular industries and job roles have different lenders that will lend you more money and give you a higher chance of your mortgage being accepted because they kind of niche down a little bit into these particular industries. So if the mortgage lender that you want to apply with is happening to have the highest interest rates at that particular point in time, sometimes you do not have a choice but to go with them just based on the fact that they are a specialist in your industry and they will be the only lender that can lend yourself. But again, this is slightly outside of your criteria and it doesn't always mean the rates will be higher, because it could just be that when you're applying for the mortgage, that particular lender will allow you to qualify for the cheaper rates if that is what they are currently offering. Another thing that's outside of your control is market conditions. So for example, it is a bit of turbulence in the market as we see the end of 2023. Interest rates skyrocketed very, very quickly. So the interest rates at that point in time have increased quite dramatically and every lender's done the same. You do not always have a choice in being able to qualify for cheaper deals. You've just got to be able to apply for what the cheapest is at that point in time. My name's Anthony from Bulk Mortgages, and if you want to find out more details about interest rates and mortgages, press like and subscribe now.